All right, bull runners, welcome back to the channel. I got my pink coffee mug going on here. I added some protein in this thing, ready to get this video rocking and rolling for you guys. Hope you're having a blessed day today, blessed night, blessed morning, wherever you're watching this from in the world. We got some amazing news with what the Federal Reserve is doing. It's pretty crazy. They're about to do the unthinkable again. When we talk about the FOMC meeting coming up, we have some breaking news to get into in this video about Ripple's president making some important announcements. US is the only country crypto startups should avoid, is what the CEO Brad Garlinghouse is saying. We have to get into the XRP price chart, and then also what's happening with FTX receiving a court appeal to liquidate $3.4 billion in crypto assets. How that will affect the market. We're looking at the US dollar rallying right now. The inflation report coming back at 3.7%. What's about to happen at the next FOMC meeting that you need to be aware of. The US dollar compared to the Dow Jones Industrial Average, along with the federal funds pivot on what happened in the past and how that could affect the S&P 500, the stock market, and the crypto market moving forward, and what you need to do to prepare. As always, it's not financial advice, not investing advice. Comment 777 if you're feeling blessed, if you're feeling bullish, and if you're ready to discover our #1 way to earn passive income online without any crypto trading experience, then check out bullrunners.com. As always, let's run it. All right, bull runners, welcome back to the channel. So XRP is sitting at 48 cents right now with a $26 billion market cap. The total market cap of the entire industry is $1.05 trillion as we await and anticipate a blanket approval for spot Bitcoin ETFs.
And also, I do believe the role of crypto is digitizing gold in many ways. Instead of investing in gold as a hedge against inflation, a hedge against the onerous problems of any one country or the devaluation of your currency, whatever country you're in, let's be clear, Bitcoin is an international asset. It's not based on any one currency. And so it can represent an asset that people can play as an alternative. I would call the foundation of Blackrock is about hope. You invest for retirement because you believe tomorrow is better than today.
When we're looking at the XRP price chart right now, XRP is moving based on Bitcoin and the rest of the markets with the liquidity that the Fed is about to dump into the markets based on their pivot. I'm going to explain in this video how this will be affecting XRP. And so right now, what we can see on the XRP price chart in terms of the RSI is we see a double bottom forming right here. And the real question is if XRP can break from this descending resistance right here and break through the 200 moving average to retest the 50 moving average before seeing another consolidation, or if XRP would break to the downside, break below this support range right here, and drop all the way down to this upward trending support line right here at roughly about 42 cents. So in this video, I want to talk about what would cause this. And then on the RSI, we see this double bottom trend reversal. If we see, the RSI flip this, hold it as support, we could see XRP trade bullish alongside Bitcoin if the US dollar sees a reversal. So let's talk about it. Let's discuss it. And then I'm going to get back into the charts with you guys towards the end of this video. So the judge in the lawsuit clearly said that XRP in and of itself is not a security, which kind of opens the doors to us to really expand our business, not just in the US, but even more globally. And so Brad Garlinghouse is saying, he's the CEO of Ripple, and he revealed in a recent interview that 80% of the crypto firm staff hiring will happen outside of the US.
Look, I'll just start by saying I think it's super frustrating. You see markets like we have here in Singapore, certainly even what we're seeing in Hong Kong, the UK, Dubai, where the governments are partnering with the industry, and you're seeing leadership, you're providing clear rules, and you're seeing growth. And frankly, that's why Ripple is hiring there. 80% of our hiring this year will be outside the United States. What we now have seen, at least in the Ripple case, is the judge in our case very clearly, succinctly said XRP is not a security, period. What they have asked permission from the courts to appeal isn't actually whether or not XRP is a security. That is still clear. It's more nuanced about whether or not in certain circumstances, if there's a transaction, there'd be an investment contract. So I don't know what the court will rule about whether or not they're even allowed to appeal right now. But I remain very optimistic because I think as you go up the appellate court system in the United States, you actually get more conservative. And that I think bodes well. And at the end of the day, I said this a long time ago, the facts are on our side and the law is on our side. And we'll continue to prevail in court because of that. The US is still the largest economy in the world at 22% of global GDP. And so we will have a presidential election. There will be a change, or maybe there'll be a change. I don't know if Biden's definitely running. I don't comment on those things. But I think there'll be some shift as you see new administrations come in. I think eventually Congress will be, frankly, called to act. And I think the fact that the SEC continues to lose in court, there's another decision recently around a grayscale ETF conversion. And look, the judges are using really harsh language about the SEC. In the grayscale case, the judge's ruling, there's an appellate court, a unanimous 3-judge panel saying that the SEC was being arbitrary and capricious. These are pretty harsh words for a government agency. Look, I would like closure, and I'd like to not have it, ongoing. I'm very optimistic that if the SEC wants to push this to Supreme Court, that'll be even a more final verdict that what Gary Gensler believes is not what the law says. Look, there's no question when crypto is going through its boom cycles that's a better thing for the whole industry. But Ripple I've been in the company 8.5 years, and every time we've gone through what are often called crypto winters, Ripple has grown. We're in a very strong position with a very strong balance sheet. As you mentioned earlier, we closed one acquisition earlier in the year. We have another pending acquisition right now. We're continuing to play offense in a whole bunch of different ways, and we're growing the business. We're growing our customers. We're growing our product suite. We believe that our customers are coming to us really seeking for us to be the infrastructure provider around blockchain and crypto technologies. And we started with payments, now we're in custody, we'll continue to expand beyond that.
So I've said this time and time again, you obviously understand this, I don't have to insult your intelligence here, but the majority of these crypto companies don't need the United States, or they don't need the SEC to continue operating and having decentralization through other countries, companies, and all that stuff. So the United States is a small blimp on the radar. Case in point is the reason why Binance is the largest crypto exchange, because they're international. And so when we look at US congressmen like Tom Emmer introducing a bill to ban the Fed from creating a central banking digital currency, or CBDC, the Central Banking Digital Currency Anti-Surveillance State Act is what it's called. It would ensure that there is a check on unelected bureaucrats and ensure that the United States digital currency policy upholds values of privacy, individual sovereignty, and free market competitiveness, according to the congressman. And so, this has been getting a lot of support. We posted this on the community section. Let me know your guys' thoughts on this. Doesn't mean that it'll pass, but the fact that he's proposing this, he's going to get a lot of support for something like that. Whereas on the other side of the scale, if we look at what's happening with, FTX in terms of some bearish news, I have some bullish news and bearish news to bring to you. And this right here is bearish news in the short term. On the long term, is a small blimp on the radar, because with FTX receiving a court approval to liquidate $3.4 billion in crypto assets, that includes Solana, Bitcoin, Ethereum, Wrapped Bitcoin, Wrapped Ethereum, Tether, XRP, STG, APT, BIT, and their bankruptcy estate is the #1 category by market cap on coinmarketcap.com. So we sort by, when we sort by categories and we go based on the largest by market cap, we could see that they're #1 in here. So ultimately, how that would affect the markets doesn't look like they've really liquidated anything yet. If anything, Bitcoin is rallying right now alongside the dollar. And if we were to compare Bitcoin to the dollar, well, it moves on a macro scale inversely to the dollar. So as you can see, while the dollar is rallying, Bitcoin is dropping, and while the dollar is dropping, Bitcoin has been rallying. So what's been happening since, the 17th of July over here on Bitcoin, when Bitcoin was at $31,700, is Bitcoin has been seeing a bearish sell-off while the dollar has been rallying. Now, one thing that's interesting to note over here on the RSI, on the DXY, which compares the US dollar compared to a basket of other currencies across the globe, well, it's sitting at 68 right now on the RSI, so almost in oversold territory above 70. So I'm going to explain what I would expect for the dollar to happen as it rallies up a little bit further. I would expect there to be a reversal coming here soon for the dollar, and I'll explain over in Europe what's happening right now that would cause a reversal for the euro as well too, and the reason why I think crypto and Bitcoin and XRP is going to see a rally in the short term, followed by a sell-off towards the end of this year. And so that's just what you need to be ready for. So a lot of traders are expecting, the Bitcoin to come up to the 200 moving average, push a little bit higher, and then see a sell-off to the downside after that, where the dollar turns bearish. Now, could that happen? We'll see, but let's get into some more news, because according to the Bureau of Labor Statistics, the consumer price index, or inflation in the US, has risen to 3.7%. So the Federal Reserve raising the effective federal funds rate, they're going to have to keep going, because CPI in the US has increased higher than what analysts are expecting. The data is contributed and is a continuation of the previous month's trend, where CPI increased to 3.2% after falling to 3%. So it's going up. So what the Fed's doing is not working. They're going to need to keep raising the effective federal funds rate, and the pivot could be coming later than everyone would expect. It should be noted that June had the lowest CPI reading in almost 2 years after seeing, double-digit inflation nearly. The real inflation is higher than what it is right now, so it was well above 10% at the peak. And the Federal Reserve typically responds to rising inflation by considering an increase in the federal funds rate. So this is done to help control inflation by making borrowing more expensive for banks, which would reduce consumer spending and business investments. And the impact on this in the markets are as follows. So for the crypto market, like Bitcoin, Ethereum, XRP, they're often seen as a hedge against inflation. So a significant increase in inflation could initially boost interest in cryptocurrencies. So that's why we're seeing a rally right now in the market with this inflation report coming back higher. So even though this is like bearish for the cost of goods and services in the grocery store, if you're going to buy your eggs or your Tide Pods or your chicken nuggets at McDonald's or whatever, you're going to spend more money on food. However, it's bullish news for crypto because people are seeking alternative stores of value. Now, in the terms of a long-term impact, if the Federal Reserve responds by raising interest rates aggressively again to combat inflation, it may lead to a stronger US dollar and potentially reduce the attractiveness of crypto, as they're often inversely correlated to the US dollar, but that won't last forever. And ultimately, crypto, I believe, will rally even if we see crypto suppressed if the Fed keeps hiking rates higher than 25 to 50 basis points. Now, in the stock market may react negatively to the news of higher inflation, as it can erode real returns on investments. Stocks that are sensitive to interest rates, like those in the technology sector, might be particularly affected. In the long-term impact, if the Fed raises interest rates to control inflation, it can lead to reduced consumer spending and higher borrowing costs for companies, potentially impacting corporate earnings and stock prices as they have to pull back from their stock buybacks, because the majority of these stocks are propped up by stock buybacks by the owners of the company and the corporations that control them. And so in terms of commodities like oil, metal, agricultural products, they can benefit from higher inflation expectations, as they are tangible assets often used as hedges against inflation. So the long-term impact for commodities, if they respond through higher interest rate hikes, it could strengthen the US dollar, which would put downward pressure on commodity prices, as commodities are typically priced in dollars. And so when we look at something like precious metals, silver, gold, precious metals are considered traditional safe haven assets during times of inflation. So higher inflation would boost demand for silver, it would boost demand for gold. And with other markets, the impact on precious metals can be influenced by the Federal Reserve's response. So if the Fed raises rates aggressively, it would dampen the appeal of precious metals. And overall, the reactions of these markets can be complex, obviously, because depending on the speed and the severity that the Fed raises the effective federal funds rate will really determine on how these markets react. And I'll get into the expectations of what people are expecting for the next FOMC meeting. So the most important thing that you can do, regardless of what the Fed does, because it's virtually impossible to know what they do until they do it, it's to focus on what you can control. Because when you focus on what's out of your control and what's going to happen in these markets, then it's very, very tough for you to get ahead unless you're a Fortune 500 company that's privy to the insider meetings of what they're going to do before they do it. So the most important thing is to create passive income, that can continue to allow you to dollar cost average as the assets that you believe in, like precious metals, commodities, cryptocurrencies, maybe the stock market, if you still like the stock market, for you to accumulate more as the dollar loses its value. So if you guys want to learn that, you check that out at bullrunners.com. But looking right here on United States inflation rate, 3.7% from 3.2 to 3, how the Fed responds if they pause on their next meeting. If we opened up the Fed watch tool, it shows 97% are expecting 525 to 550 for the next FOMC meeting. That's where we're at right now, 5.25 to 5.5 as the target range. So the current, rate for the federal funds rate is 5.33% as the average between the first percentile, 25th, 75th, and 99th percentile, meaning that it fluctuates between 5.25 and 5.5% as the rates that, banks are charging for their overnight loans to each other. So 5.33 is the average. So if 97% are expecting them to pause right now, well, then once the next report comes out for inflation, if it's even higher, then they would probably raise for the next meeting. So we'll see what they do. It's coming up in about 5 days and 20 hours. If they pause and they don't raise the effective federal funds rate for this meeting, I would expect them to raise in the next meeting. So just looking at the DXY by itself right now, eventually we're going to see a reversal here as we push upwards into over spot territory into 70 to 80 on the RSI. And then we would see that come down. For the dollar, we're well above the 200 moving average. We're well above the 50 moving average. I would expect there to be a cross. So the 200 moving average to cross below the 50 moving average simultaneously while the dollar comes down. And then also what's causing the rally in the dollar is dovishness over in the European Central Bank. The European Central Bank raised by 25 basis points, which as expected, but initiated, it might be done with their hiking. So in the US labor market, retail data remains strong. So the DXY rising 0.6% to 105.38 as the greenback strengthens versus the euro. The US currency is expected to remain strong until the global economy improves and the Fed begins cutting rates. And so lots of people are expecting the dollar to remain strong compared to other currencies, but regardless, the dollar is going to continue losing value in terms of spending power because of inflation. In the euro is even worse right now. Look at the inflation back in October 2022, it was 10.6%. Right now over in Europe, it's 5.3%. The United States is 3.7%. And so when we pull up the chart right here and we compare the dollar, the US dollar versus the GBP, the pound sterling on the left, and then the pound sterling compared to the dollar, we're at a very interesting point right now. If you look on the RSI, we're sitting at 68, almost in oversold above 70. We're also right at the 200 moving average right here. Now, comparing inversely, the British pound to the dollar, we can see right here that we're at the 200 moving average to the downside. We're also at about 38 on the RSI. So we could push a little bit further to the upside for the dollar and ultimately come back down after that. And we could push a little bit lower compared to the British pound to the dollar, and then see a reversal to the upside and another bounce, followed by continuation to the downside, potentially followed by continuation to the upside right here. And so this could be a macro market rally for the dollar while we see massive volatility in the crypto market. But I do see a sell-off coming for the dollar. I do see the dollar reversing and that being bullish for the crypto market. And then also with the stock market right here, we're looking at the Dow Jones Industrial Average. We're looking at a double bottom right here where we can see bottom number 1 right here, bottom number 2 right here. We see the neckline right here. If the Dow can break this neckline, then I would expect it to push higher to the upper portion of this rising wedge formation right here. Now this push upwards for the Dow would come at a bearish reversal for the dollar as the dollar gets into overbought territory. And on average, a rising wedge formation is 60% bearish, 40% bullish. It acts as a bearish pattern when it occurs in a market during a price downtrend. When formed in an uptrend during a bull market, it can be either bullish or bearish, obviously, depending on how the price responds when exiting the pattern. So if we do not see the Dow trade upwards and we see it break this upward trending support line right here, followed by a back test, I would expect the Dow to continue to trade to the downside. So a key area of support to watch is this upward trending support right here. If we can hold this as support, we're more than likely going to continue to trade higher. If we don't hold it as support and we break it, and then the 200 moving average is going to act as the next support to bounce off of, retest this upward trending support as resistance, and then continue to the downside. So that's what I would expect if we see a break down. And depending on how deep the DXY and the dollar reverses compared to other countries will determine the rally at which Bitcoin rallies to the upside. So I am expect Bitcoin to rally a little bit further and then see, some drastic sell-off coming before the halving for Bitcoin to drop even lower. And then depending on how low we go within this range over here, I would expect Bitcoin to bounce out of here leading into 2024, 2025, because we spend the first 6 months of the year bullish, and then the last 6 months of the year, I believe, is going to be partial bullish mixed with mostly bearish price action while the dollar rallies a little bit higher. Now, gold is very interesting because we've been bearish since May of this year, so for several months. So if gold continues to see a sell-off to the downside, the 200 moving average, I believe, will eventually cross the 50 moving average. And when that happens, I would expect gold to snap, break resistance, and trade bullish, and then ultimately that to be massively bearish for the dollar as the dollar sees a sell-off sell-off. So depending on when the dollar reverses is when I would expect gold to break to the upside and to be super, super bullish for precious metals. So if you're holding gold, you're holding silver, get ready for a massive opportunity to back up the truck. Again, don't buy gold, don't buy silver, don't buy anything. Watch this for learning purposes only. The last time that we saw the 50 moving average cross below the 200 moving average, we did see gold sell off even further, right? We saw a rally up to the 50 moving average, then we saw gold drop 10%, and then it dropped even further than that. It dropped about 13% all the way to the bottom here in September of 2022. And so we could see a further sell off to the downside. The time before then, we saw gold drop from, roughly $1,860 to drop 10%, so $1,675. So if we were to see another drop, right, gold has rallied up to the 50 moving average again. If we see another drop of 10% for gold, that would bring it all the way back down to $1,750 per ounce, bringing it back down within this range here that acted as support from June of 2021 all the way until December of 2021. So if we see gold drop all the way down within this range right here, then I will probably be selling my condo and putting it into precious metals to accumulate as much gold as humanly possible because of how much gold China's central bank is buying. All these central banks are accumulating gold more than ever before. So I would back up the truck for gold if it dipped down to $1,700. Now, if we see a sell-off that deep for gold, I would expect there to be a sell-off for silver as well too, to $19 to $20 per ounce right here at this upward trending support line that you guys can see. All the way back to November of 2001, you can see silver was about $4 an ounce. It rode along this support before we saw it break to the upside and go on this massive rally upwards of $40, nearly $50. Yeah, upwards of $50 right here. Came back down to the support and rode alongside the support during the pandemic right here. It bounced off of it. It wicked below it, but then it came back above it. So if silver were to come back down within this range right here, consolidate, I would expect silver to spring off of that. And I would accumulate more silver at $20. Now, one thing that's interesting to note, if we look at the last Fed pivots when they went from raising rates to pausing rates, then to dropping rates, one of the previous times was back from 2008 to 2009 when they started dropping rates drastically. So when they started dropping rates, the DXY went from 71 all the way upwards of 88. So we saw a massive rally of 24%. And we saw gold go from $989 per ounce all the way down to about $600 per ounce. And it dropped over 30% by October of 2008. One of the other Fed pivots happened at the end of July in 2019 and came down to next to nothing by beginning of April of 2020. So during that period, we saw the DXY go from 97 and it dropped all the way down about 8.8% to 89 by January of 2021. And during that same time period, we saw gold go from about $1,400 per ounce upwards 10% to $1,500, and then it dropped back down to about $1,400. And then ultimately rallied upwards over 40%, over $2,000 per ounce by August of 2020. And silver went from about $14 per ounce upwards of $30 per ounce, rallying over 100%. If we go all the way back to the pivot of November of 2000, when interest rates went from 6.62% down to 1.52% by the end of 2021, gold was really volatile during that period. It rallied upwards of $300, but it ended by October and November of 2021 only up 3% at $273. But then after that, once the Fed pivot was done and they started QE again and quantitative easing, low interest rates, then gold went on a massive rally after that. Same thing happened for silver, except silver actually saw a sell-off to the downside of about 11%, dropped from $4.64 per ounce to $4.09 per ounce by December of 2001. And then silver went on an insane bull run of over 1,000%. It pulled to 10x. So even if we see some volatility over the next year for silver, like let's say silver sees a sell-off to the downside towards this upward trending support line that you guys can see right here. Silver comes down to $20 per ounce and then ultimately just kind of bobbles around for a little bit and then breaks out of here. I would expect this to be a symmetrical triangle break to the upside followed by a back test. Massive bull run for silver. I would expect silver to retest the all-time high, then ultimately break the all-time high and upwards of 2030 over the next 7 years to be massively bullish for silver, to be massively bullish for gold. No guarantees here. In terms of price predictions, it's virtually impossible to predict things with 100% accuracy. But in times of rapid destruction of the dollar, inflation being constant and persistent, I would expect gold to push upwards of $3,000 to $5,000 per ounce. I would expect silver to be $50 to $100 per ounce, potentially even more over the next 7 years. And I would expect when the Fed pivots, there to be another crisis on the horizon to take place. You saw the credit crisis, subprime mortgage crisis. You saw the Fed pivot leading to the COVID crisis. You saw the last Fed pivot before then was the dot-com pivot. Then you saw the crash of 87, a Fed pivot, happen. So ultimately, Fed pivots are not a good thing. Leading up to a Fed pivot, it can be volatile, but it ultimately pushes markets higher. As you guys can see, if I pull up Bitcoin's price chart, you saw the Fed raising the effective federal funds rate starting in March of 2022, when Bitcoin dropped from $48,000 all the way down to $15,000. It dropped 67%. And even as the Fed continued to raise the effective federal funds rate in November of 2022, Bitcoin rallied over 100%. So the Fed funds rate was at 3.08%, and now it's at 5.33%. So even with them continuously increasing it, Bitcoin saw a rally. So when the Fed decides to pivot, that's when I'm expecting a massive dip to take place, followed by massive bull run after that, destruction of the dollar, silver to go on a massive bull run, gold to go on a massive bull run. And of course, XRP, even if we dip lower, I would expect XRP to be the showstopper by 2025. And if we're looking at the Dow to gold ratio, this 100-year historical chart, which shows how expensive it is to buy the Dow with 1 ounce of gold at any given moment, we're at 17.9. Simply, if you were to break this down, what this means is anything above 15 is bullish for gold and bearish for the stock market. Anything below 5 is bearish for gold and bullish for the stock market. So the fact that we're sitting at close to 18 above 15 is bullish for precious metals. So whether the Fed pauses, raises, or pivots on their effective federal funds rate, either way, the spending power of the dollar is going to continue to drop in value because inflation is going to remain constant. Crypto since 2011 has remained bullish, whereas the dollar since 1985 is bearish. We're backing up our truck all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind. So if you want to learn our #1 way to earn passive income online without any crypto trading experience or knowledge whatsoever, go check out bullrunners.com, click the button on the page, put in your best email address, your name, your phone number, and you're going to be receiving constant, time-sensitive updates about what's happening in crypto and the financial space right to your inbox. So I appreciate you for watching this video. As always, you know what to do. Stay bullish.